no easy way to say this, but only about $5 billion is life insurance, and that will be covered by the major life insurers, such as Metropolitan and John Hancock.
What's your view on these stocks now?
They've come down so much. Perversely, this industry will ultimately benefit. Premium rates were rising. You indicated earlier that the stocks had actually done pretty well before this. That's because after more than a decade of cutting rates, they had begun to increase rates. Now premium rates will have to go up dramatically, in some cases 200% and 300%. So I think I'd be a buyer of the stocks, particularly the ones that are most fat with capital, if you will.
Such as?
AIG and Berkshire Hathaway stick out. Between them, they have almost $100 billion of capital. Now that covers a lot of businesses, but they should be in a marvelous position after this.
Are consumers going to have to pay more for their insurance too?
Yes, not so much personal lines. Even companies that haven't been affected, such as Allstate, have come down in price. Auto insurance rates will not go up much. Commercial rates will go up significantly, and reinsurance rates will go up dramatically.
Byron Callan, is this good news for the defense industry?
It is good news for the defense industry. I think what it's done, it's certainly solidified the intermediate term for the outlook of the industry, and it's possibly enhanced the long-term growth prospects for many of the companies in this sector.
Is there a future for Boeing?
Definitely, there's a future for Boeing.
It was a pretty poor performer this week.
It certainly was. Their announcement that they were having massive layoffs, that they were going to cut their deliveries for next year, and implied that 2003 would also be a down year, were reflected in the stock. I think, however, that what people sometimes lose sight of is this is the second largest defense contractor in the world. They have a very diverse portfolio of military aircraft, missiles, space satellites, other electronics, and I think that part of their business is actually going to hold up very well in this environment.
Well, President Bush campaigned on more defense spending. Some people think that the trend in that direction actually started under President Clinton. Are they right?
The budgets did start to rise under President Clinton, with certainly some help from Congress. Ironically, I think the Bush administration came into office with maybe a little bit tighter rein on defense spending. We had the tax cut and a lot of issues arise in the surplus, so that's changed, though.
We all know this is going to be a unique kind of war, if it is a war. We're not fighting a country. We don't know where Osama is. We don't know where in 62 countries, at last estimate, his people are. Who are the companies that have the goods that can help us?
Well, I think certainly, as we've seen this week, there will be conventional military power potentially brought to bear in this situation. Long-range aircraft, the transports, the tankers, the fighter aircraft. I think intelligence is clearly going to play a key role in this particular war. Finding where these people are, where they're located, where their training camps. That's definitely a theme that's going to play through.
What are the attractive stocks in your view?
I still here, even after the week we've had in this group, I'm still very comfortable with General Dynamics, Alliant Tech Systems, Northrop Grumman, L3 Communications are the ones I'd focus on here. I'd like to sort some things out and see how some of the other majors may fare. We've had a good move in this sector. There may still yet be some more to come, but there may be a period here where some of the other larger names kind of pause.
20 years ago in this program, a defense analyst said, if the CIA were a stock, I'd buy it. Is there a way to buy intelligence?
Most of the large intelligence programs are embedded in the major companies, in Lockheed Martin and Boeing, Raytheon, and TRW. There really aren't many very small focused companies that I can think of that are the pure play on that market.
Would you expect your group to outperform the market strongly?
Most certainly.
Paul Ting, let me turn to you. A week ago, many people thought that the international oil companies would be big beneficiaries of this crisis. Doesn't seem to have worked out. Why not?
Well, I think there are basically two fundamental problems. It relates back to demand and supply. On the demand side, I think there's major concern that with the implied economic slowdown, and perhaps specifically to the jet fuel side of the equation, that the demand could suffer immensely. And then on top of that, this is quite different from previous periods when oil prices exploded upward as a result of some international crisis. This time around, on the supply side, there's plenty of spare capacity within OPEC. OPEC spare capacity perhaps is in the 4 to 5 million barrels per day range. Those two facts basically caused oil prices to come down.
A poor world economy in the 70s didn't stand in the way of a rising oil price, but at that time OPEC was out to get us. Are they not out to get us now?
Well, I think OPEC, probably OPEC's major concern is the fact that if you kept oil prices too high, it's going to have an additional negative impact on demand. So the kind of high wire balancing act they're trying to achieve is very difficult right now. So obviously they have their own revenue in mind, but I think OPEC also has the concern about not killing the goose that lays the golden egg. If you don't have demand to support your prices, ultimately prices will come down.
Ray has spoken to the fear of flying and the impact it may have on the airline business. Will this translate into a fear of driving? Will there be less attendance at amusement parks and less use of gasoline generally?
I think that's a double-edged sword. If you look on the driving side, clearly the fact that if you have to take shorter distance via flying before, it could substitute that with driving. So from that perspective, you probably would argue that driving could, as a matter of fact, increase. On the other hand, the overall fear about security could cause people to probably want to stay home a little bit more. I don't think the driving side is going to be a major impact. On the other hand, I think the overall economic slowdown would translate to other forms of demand, perhaps suppression on demand.
What are the oil companies telling you about how severe that slowdown is going to be?
I think most major oil companies have been anticipating lower prices to start off with. Realistically, since the tail end of 1999 until just recently, even today, oil prices have stayed significantly above normal. So most big oil companies are budgeting on prices lower than what is today.
What do you expect to happen to the oil price?
I think it's going to come down. I think oil prices probably will gradually moderate, even though prices have come down already from $35 a year ago. But compared to the historical level, it's still significantly above historical level.
Do you think we'll be below $20 a barrel in the year ahead?
I think you can't rule the possibility out. Certainly there could be some spikes below that level even.
How do the stocks look to you now?
The interesting thing about oil companies is that in spite of the fact that we're quite concerned about the outlook of oil price, the oil companies themselves have been basically discounting prices below 19 or right around $19 anyway, which is the historical average oil price. So we do continue to favor the major international oil groups.
And who are your favorites among your favorites?
I think the most interesting situation has got to be Texaco and Chevron. Those two have some special catalysts, if you will. The impending merger, I think, will probably take place sooner than later. And I think that's going to provide some catalyst for that stock. And it's fundamentally a very solid stock. Exxon is always deemed as a defensive stock. And I think, given the uncertainty of the current environment, I think Exxon would be a good long-term performer as well.
None of us knows what's going to happen internationally, but there were reports today that Iraq might be somehow involved in all this. If we have a war in Iraq, what's that going to do to the oil price?
Well, clearly, if there's going to be a war with Iraq, the initial reaction is going to be very strong performance on oil price. There's no question in my mind. But then again, if you look at Iraq, they export about a little over 2 million barrels per day. Given the 5 million barrels of spare capacity that I talked about before, there is a good chance that somebody else could step in there and pick up the slack, if you will.
In your view, are the so-called moderate Arab countries like Saudi Arabia anxious to put down Osama bin Laden and to cooperate with us?
I think that the Arab countries probably would feel some pressure to, at least from the oil price point of view, to assist the United States in terms of bring down oil prices from their perspective. Politically, I think it's just awfully difficult and too complex to really figure out exactly what the major driving forces might be.
Finally, what would you do about the drillers?
Now, I don't cover that stock myself, but as far as I'm concerned, the drillers are very heavily influenced by oil prices and capital spending. Oil prices probably would be more negative than positive, but capital spending probably would maintain to see some pretty good growth.
But in general, you don't think this is a disaster for consumers of gasoline and oil products?
I don't think so. I guess if you look at it from a consumer's point of view, they may benefit from lower prices, as a matter of fact.
There we do have to stop. I want to thank my guests, Ray Neidl, Mike Frinquelli, Byron Callan, Paul Ting, for joining me tonight. Hope you'll be back with us again next week. Then my guest will be the most influential man in the world of bonds, PIMCO's Bill Gross. He'll be giving us his views on the outlook for interest rates and fixed income securities in the wake of the world's ongoing adjustment to these dreadfully changed times. Meanwhile, this has been Wall Street Week. I'm Louis Rukeyser. Good night.
Wall Street Week with Louis Rukeyser is produced in association with Rukeyser Television Incorporated by Maryland Public Television, made possible by Deloitte & Touche. Markets may rise or they may fall. Who helps companies prepare for the unpredictable? For business advisory services, the answer is the people of Deloitte & Touche. By Oppenheimer Funds. Insight, teamwork, discipline. The strategy Oppenheimer Funds uses to achieve long-term performance. Oppenheimer Funds, the right way to invest. By A.G. Edwards, providing a full range of personalized financial, retirement, and estate planning services. A.G. Edwards, trusted advice, exceptional service. And by the Federated Kaufman Fund, the experience of Kaufman, the resources of federated investors, managers of over $145 billion in assets. For a printed transcript of this program, send $5 to Transcripts. Wall Street Week with Louis Rukeyser, Maryland Public Television, Owings Mills, Maryland, 21117. Wall Street Week with Louis Rukeyser is produced in association with Rukeyser Television Incorporated by Maryland Public Television, and they are solely responsible for its content.